Okay, hi everybody. Welcome to today's webinar. We're talking again about maximizing the CFO office productivity. Today we've got Alexa Matthews joining us from Avalara, and we're going to be talking about the elevating tax compliance to excellence topic, which should be terrific. Alexa, thanks for joining us.
Yeah, thanks very much for having me.
So before we get started, all participants will be mic off. The chat session will be open if you have any questions. And if we are running this as a recorded session as well. If you'd like to get in touch with us at the end, we've got contact details and be more than happy to carry that forward as well. Alexa, thanks for joining. So you're a senior solutions consultant with Avalara. And deal with the area of seamless tax compliance on a day-to-day basis. I think we're going to have a terrific conversation. I'm managing partner of Etter+Ramli, my firm, and we help customers run excellence within NetSuite. Alexa, I'm going to hand it over to you for you to give us a short walkthrough of your career and a little bit about Avalara before I introduce myself and ER before we then talk about the couple of topics. So over to you, Alexa. Thank you.
Great. Yeah, thanks very much, Todd. So hi, everyone. As Todd said, my name is Alexa Matthews, and I'm a senior solutions consultant at Avalara. Been with the company for around 9 years now, and I have over 15 years experience within the global indirect tax and tax technology space. I'm based out of Brighton in the UK, sunny Brighton. Basically, if you go directly south from London until you hit the sea, that's where you're going to find us. And I work with our global customers and partners to help them maximize their use of Avalara's global tax software solutions. All right, so let's talk a bit about Avalara then. So we've been around for nearly 20 years now. We have close to 5,000 employees spread across 4 continents. And to date, we have over 30,000 customers worldwide. And really, Avalara exists for one reason, which is that being a tax compliant company on a multinational scale is almost impossible to do on your own. And to give you an example of why this can be so challenging, if we look at the US, last year in 2022, there were over 100,000 tax rule changes across 13,000 different taxing jurisdictions. So it's incredibly complex for businesses to try and manage things like that on their own. And, if we think about indirect taxes more broadly, VAT, GST, sales and use taxes, while there may be similarities, they're all going to be administered differently in every country around the world. And sometimes, like the US or Canada, India, even within different jurisdictions in the same country. Even if we look at somewhere like the EU, it's a supposed single market. Every country has its own legislation and their own interpretation of the EC directive, which they all have to adhere to as well. And, within the EC directive, they have provisions. Some of them are shall provisions. Every country has to do this thing. Some of them are may provisions, which means each country can kind of pick and choose which parts of that legislation they want to use. And that means then every country is going to interpret it and implement it differently. And because of this, finance leaders can find themselves spending far too much time, money, resources trying to kind of chase down those changing compliance obligations.
I get it.
And so, yeah, it's, it causes all kinds of challenges for businesses here. And really, that's where Avalara comes in. We provide software solutions to support businesses in managing their indirect tax compliance around the world. And this hopefully allows our customers, to spend less time, money, resources on their indirect tax compliance and more time focusing on their core business. So we aim to help businesses, connect their tax data to and from all of their relevant systems, make sure all of their records and reports are accurate, to then help manage their ongoing compliance throughout the full end-to-end compliance lifecycle. And this is right from helping businesses recognize and understand what even are their tax obligations, support them through getting new tax registrations where needed, act as a fiscal rep as well, if that's needed, through to accurately calculating their taxes, and then supporting with tax compliance e-invoicing, where that's mandated. We're seeing this more and more now really hot topic for businesses that are trading internationally. And then, of course, the final step in the chain, submitting accurate and hopefully timely VAT, GST, sales and use tax returns, along with any supplementary declarations and filings. So what does this mean then for NetSuite customers? If we can just, thank you. Yeah, so, Avalara is a long-standing partner of NetSuite, and we aim to integrate seamlessly with NetSuite so that customers there can benefit from the time and cost-saving efficiencies of tax tech solutions, but while still using your existing systems. We've been a partner of NetSuite's for nearly 20 years now. You remember I said we've been around for nearly 20 years now. We do currently partner with around 1,300 source systems, but NetSuite was one of our very first partnerships. And because of this, we now have around 10 different integrations with NetSuite products for things like, calculation, e-invoicing, reporting, other areas like exemption management in the US as well. And we currently support around 3,500 joint customers with NetSuite. So we've been doing this for quite a while now, both with NetSuite and also NetSuite users. Good. Yeah, so that's a little bit about us. Anyway, Todd, back over you to talk a little bit more about what you do with ER.
Thanks, Alexa. The Avalara has got a really great presence in North America, but the rest of the world might not necessarily be fully aware of that. So it's terrific to put that into context. Thanks so much. So Etter+Ramli, we work the client side NetSuite for as a managed service provider. So more or less, we're providing clients with a resourcing solution to run their systems better. What this really comes down to is that we talk about ourselves as an independent client side enabler of change, and we structure this up as a managed service provider so that we're really fully engaged and fully linked into our customers as their NetSuite team. And what that's all driven by is that we manage customer success for NetSuite. We're a modest team, but we're growing. We look after customers across 36 countries, and we've got plenty of knowledge and experience with how NetSuite works in a lot of markets around the world, and we deal with the coal face of user problems in all of those markets, and of course all of those integration problems of getting people to work in a common way across the globe. Productivity is what really drives us. Productivity growth is what really drives us, and we really strive to improve business operations to enhance and drive productivity effectively. Ultimately, all this comes back to is success and growth, and that's what we're charged with doing every day, helping clients get more out of their NetSuite investment by running their process better. I've spoken about managed success. Managed success is our methodology, and it's an amalgamation of the managed service concept for IT services and the concept of customer success. And we feel as though an independent approach to customer success provides a superior mix of service value and delivery to clients. So we amalgamated these together and made managed success our own. What really underpins our approach is that before we get started on really process improvement and what's called business partnering, we like to make sure that we've got three very core key elements well under control, and they're the triage, automate, and compliance. Triage more or less makes sure that every user can do what they need to do in a way that is supported and regular, that all processes are automated to the extent that they're able to be automated, and that we're running compliance on data quality as well as process gates to make sure that people are using the system the way they're supposed to. Once we have those things under control, we find that the real topic about enhancing and improving the system and moving business forward is easy and yields much better results. Okay, we've jumped through that pretty quick, which is terrific. So now we're into the nuts and bolts of it, Alexa. So scaling of tax compliance. There's been a lot of activity in this area in the last 10 years. What are your quick thoughts before we get into the big questions?
Yeah, absolutely. This is something that I think like you say, particularly in the last 10 years, really is changing a lot. If we look at kind of the tax compliance landscape a decade ago, it was very, very different from what we're seeing now. You know, if we think about areas like how you report your VAT or GST, in the past, the kind of traditional model has always been an after the fact periodic summary return, you know, a handful of boxes that are trying to tell the tax authorities everything about what you've been doing in the last month or the last quarter. It means that things are very difficult for tax authorities to manage. You know, audits take an awful lot of time. They have to go back to the companies and constantly ask for more information. And with kind of a lot of the changes we've seen in technology in that time as well, it really gets governments thinking about different ways that they can leverage that technology to improve reporting efficiency and also collection of taxes as well. You know, we think a lot about the VAT gap, certainly in Europe and rest of the world as well, the difference between the amount of tax the government should have collected from taxpayers and the amount of tax they actually have collected by using things like real-time reporting, electronic invoicing, SAFT, moving away from this kind of old-fashioned traditional model means that they're knowing right at the time that it happens exactly how much tax should be paid and declared by these companies. So it really helps them improve their efficiencies, but it kind of causes the same challenges for businesses as well. And then what this means is that those businesses now need to think about ways to improve their own efficiencies and automations around indirect taxes to meet the new requirements of the government. So by automating your processes, hopefully it allows you to scale. But even within a global solution like NetSuite, adding new countries, adding new requirements in those countries can be a challenge. You know, adding in new country modules, etc., updating to support e-invoicing. So that's where you need to start thinking, how else can I look at this problem? Where can I find solutions to help me with my efficiencies and meeting those new mandates and requirements?
Yeah, you bet. And I think a lot of this tax compliance has come out of South America as well, and their very pressing need to fill a GST gap, and because it's been so successful, every other nation around the world has pricked up their ears and decided that it's got some goodness for them as well. So I think we're going to see a lot more of this in the coming years.
Yeah, absolutely. You know, countries like Brazil and Mexico have actually really led the way. You know, e-invoicing and this real-time reporting has been around in Brazil for a long time now, whereas in regions like sort of Europe and the Asia Pacific region, we're really only just starting to take it on. You know, Italy is one of the first countries in the EU that started e-invoicing. It's been really successful for them. They went from having one of the largest VAT gaps in Europe, you know, kind of this difference in tax collected. They now have one of the smallest, just in 5 years of using e-invoicing. So I think that has shown that we can take on this Latin American model and really make it successful in the rest of the world.
Yep. It's anyway. We can talk about the opinions on this for ages. Yeah. Let's get stuck into it. Hey, so
absolutely.
So look, let's start with this first one. So a pretty pressing thing. So NetSuite ships with a tax engine in it, and so I'm interested in understanding which and why, from a NetSuite tax versus a NetSuite plus Avalara approach to it. Where do you start with this sort of topic?
Yeah, absolutely. So I mean, you know, the key differences I think to think about when looking at, you know, NetSuite tax functionality and Avalara solutions is, and you'll hear me say this a lot because I talk about multi-country scaling all the time, is that Avalara solutions, they really come into their own when businesses are looking to expand internationally. And I think what's really important to note with this is that we really work alongside NetSuite. You know, we're a long-standing partner, and we're not looking to take away from what you can achieve natively with NetSuite tax. You know, whether that's legacy, if you're still using legacy, or suite tax, but we kind of sit alongside these existing systems to fill the gaps where there might be added complexity, new requirements, or, you know, where you just can't manage those requirements natively. And yeah, maybe to give you kind of some examples where we can add on to what you're already doing in NetSuite. Say you're using suite tax for calculation, so you've moved on to suite tax, you're using that for as your tax engine. But you still need a way to streamline your indirect tax reporting in all of the countries where you have, VAT and GST returns. What we do is we have integrations that can pull that transaction data directly from SuiteTax, so from the engine that you're already using, into our reporting solutions to then manage filing your tax returns. Also, say you're comfortable with your tax determination, so you're using either legacy or SuiteTax really. You've got your own rules, you're using that engine maybe for tax determination in Europe and Asia Pacific, but you need support with US sales taxes. Those 13,000 different taxing jurisdictions, the hundreds of thousands of rate changes that happen every year. Rest of world is fine. US becomes incredibly complex for you. So what we can do is we can integrate our tax engine. We're not going to replace what you're doing in SuiteTax or legacy tax entirely. We just integrate for the entities or the transactions that are happening in the US. So like I kind of said, we're filling in those gaps rather than entirely overriding what you're doing with NetSuite taxes. And how we do this, it can be really dependent on how a business is already using NetSuite. What are you already doing with NetSuite when you're expanding internationally in terms of localizations, country modules? Are you looking at external services there as well? How are you thinking about indirect taxes, I guess, when you're moving into new markets and improving those processes, maybe in existing ones as well?
Yeah, I mean, I really hear those points, Alexa. I mean, the which and why for me really talks about velocity of transactions and breadth of scale across the world. And I mean, the key benefit that I hear inside of this which and why is really about keeping the tax codes and the tax rates up to date for those different configurations. So that more or less they're bringing that problem to Avalara rather than having somebody manually updated in the system, which of course they could do themselves.
Yeah, absolutely. And I think, from my perspective, we talk a lot about the changes and the things that are happening that make this more challenging. Some countries, this may not be the case, right? Some countries, the VAT rate doesn't change very often. In the UK, the VAT rate hasn't changed in 10, 15 years. So when it comes to updating your content there's maybe not going to be a lot of issues. It's the countries where things do change more frequently, where, using manual processes or relying on local knowledge as well, because it's knowing what the changes are before you come to figuring out how you're going to implement those. It's looking at those more complex countries, the ones that are a little bit more dynamic, that are looking at making changes to how they manage their indirect taxes. That are the areas where you need to think about, is what we're doing now effective, and is what we're doing now really scalable?
Yeah. I mean, I can I really identify with that. I mean, I grew up in Australia. I'm not sure that Australia's changed its GST in a number of years. Singapore also does them as well, so I can certainly on board with that. In a lot of parts of Europe, but then during COVID, a lot of that stuff changed. Now, changing a GST rate once a year is not really the world's biggest problem. But in some of these other markets, which I definitely can identify with, where things are changing all the time, and those sales taxes are really micro in their deployment. Like I think in the States, it's down at the county level. That's just a huge amount of administrative hurdles. So I get that. It's really about scale and breadth, and NetSuite tax can do the job, but Avalara is going to solve you some problems later on down the path as you tackle some of these more extensive markets.
Yeah, and I think you touched on something really key there as well around COVID. COVID changed really the way everyone does kind of everything, but certainly for tax authorities, it changed the way tax authorities had to manage their tax kind of reporting and collection. Going and doing on-site audits wasn't possible anymore. You couldn't go to somebody's office. Businesses stopped having offices in the same way. So it changed the way they had to think about how they manage things. And that's where they kind of moved towards getting technology involved as well. And like you say too, there were a lot of rate changes that we saw throughout COVID. Some of those have changed back since. They were only ever planned to be temporary. Some of them maybe were planned to be temporary and then weren't. Some of them, the rates went up and then went up even more after COVID. So we saw a lot of changes in that time, in tax rates, but also the kind of administration of taxes with authorities around the world.
Yeah, no, I get it. This is probably a good segue into the impact of global expansion on tax compliance. I mean, as obviously businesses have a propensity to grow, or at least every shareholder appreciates that, and growing international is part and parcel with that. Now, some markets are easier. I live in Singapore, and Singapore's a terrific market to be based out of, but there's a lot of other markets in the world that offer a lot more complexity, and obviously they come with the opportunity as well. What's your take on the global expansion part of tax compliance? Really, aside from the easy, obvious one, which is it gets more.
Yeah, absolutely. And I think that, like you say, that's the obvious part, right? Tax compliance, I think it's one of those things that nobody really wants to think about when you're looking at global expansion. You want to look at growing your business, but I really do think it has to be kind of at the forefront when you're considering expanding into new markets, and we've discussed this a lot already. It's different in every country, even the countries where it's straightforward, there's 2 or 3 rates. It's a nice simple VAT return that you have to file. It's still going to be different. Often the VAT returns you're going to have to submit, they'll be through a local government portal. You need to find a way to get those credentials, maybe with somebody in country. The filing's very likely to be in the local language as well. So it kind of it gives you all of these challenges in terms of how to think about moving into those new jurisdictions. So what does this really mean for businesses then? How is this going to impact you? And I think there's a couple of different ways. Sometimes it can just become a blocker. It just means that moving into that market can be almost impossible in some cases. And I do regularly talk to companies who have maybe chosen not to trade in a certain market because it's too complicated or it's too time consuming and costly to get compliant. Examples of this are regions like Mexico. I've known it to take up to 2 years to get a VAT registration in Mexico. You have to have someone in country to go to the tax office. You have an appointment. You sit down with somebody from the government, and they will issue you a VAT registration there and then. But it can take up to 2 years just to get that appointment. So that can be a real challenge for businesses wanting to move into that market. Another example I've seen post-Brexit for the UK, a lot of businesses just stopped selling to the EU. They said, we're not part of that single market anymore. We're looking at imports and exports now. It's too complicated. We're not going to do it. And they then come to us when they get to the point of thinking, well, we want to switch the EU back on. It's too big a market not to trade with. So how can they then find ways to use software or managed services to make that a little bit easier for them? So that I think is a real impact. It becomes a blocker for you even moving into that new market. Other times what we see, and I think this is on the flip side, is it becomes a risk instead. Businesses will choose to go ahead. They'll move into that new market, maybe without really considering the tax implications, or maybe they have considered them, and they've just chosen to accept the risk that comes along with that. They're kind of thinking, I'll just ignore it for a little while, hope it doesn't become a problem right away. And what this can mean then, of course, by choosing to ignore it or not fully understanding the implications, you're going to create a risk of being found out. That causes penalties, causes interest, but also potential damage to reputation as well. And I think for us, another common point that we start talking to businesses is when they need to improve that. Maybe they're going through IPO. We see this a lot. A business will come to us as they're going through IPO to get their compliance tidied up for an audit. I spoke to a company recently. They came to us and said, hey, look, we've been trading in the US for the last 5 years now. We've never really bothered to get registered. We know we should have done. We want to go through IPO, and we can't do this while we're in this mess in the US. How do we go about resolving that? So I think they're kind of the 2 key ones. Is this going to be a blocker for you? Is it going to be a risk for you? Or sometimes it's just a time-consuming kind of pain in the backside that you really don't want to spend your time on. You have other things to think about when you're looking to grow your business. So I really think it's something, you can't ignore it. You do need to take the time to think about how is your global expansion going to impact your tax compliance, or how is your tax compliance going to impact your global expansion, and take the time to look at ways that you can streamline and improve your processes. Look at how you can think about, probably from a technological standpoint, how you can improve your efficiencies there. You don't want it to be a blocker, but you also don't want it to cause problems down the line either. So it is something that needs to be right at the forefront when you think about how you're going to manage this.
Yeah, I've got a pretty interesting story in this area. Well, at least I think it's interesting, Alexa. I had the benefit of doing a global rollout. So typically, a lot of my implementations were within the Asia area. But one of our customers based here in headquartered in Singapore here ran a global operations. And cut a long story short, they more or less said, Todd, you sold us NetSuite, so now you can have the trouble of implementing it for us as well. And so that more or less changed my complete direction in what I was doing with NetSuite as a platform. And that took us into understanding the tax compliance in 36 different countries around the world.
Wow.
And that was a terrific experience, and something which we lean on every single day. That really showed me the different ways countries kind of think about how they want to manage taxes, and that kind of put me into, I started to silo different approaches, and I had the Latin approach, which was really, we don't trust anybody, we want to fill the tax gap.
Absolutely.
And then we had the other side of the problem, which is it's all too hard, it's self-reporting, which which also has a whole different cultural implication on it as well. And then some of the Eastern Bloc that was all about everything's got to be written down on a piece of paper and stamped 3 times as well. And these different approaches to compliance were in many cases very difficult to get our heads around. And I guess I was coming at it from, let's call it, an Australian, European kind of perspective, and dealing in these other markets was a leap of knowledge. Not necessarily a leap of faith. It was deep knowledge that we had to build in order to understand it. And I guess anyone coming out of those markets dealing with other areas have got to do the same sort of bridging. So. The long and the short of that was that we got to create these different silos, and we got to manage things in this different way. And then, of course, another one comes along that sort of mucks it all up again as well, which it is. But the balance between the global expansion and the tax compliance is a real temper of opportunity, but something that's manageable along the way as well.
Yeah, absolutely. And I think you're absolutely right. You can work with the tax team who are incredibly knowledgeable, know an awful lot about indirect taxes, kind of in their, like you say, in their silo or in their model. I talk to European businesses where, US taxes is just completely wild, and vice versa as well. I'll talk to businesses maybe in the US who are looking to move into, the Asia Pacific region. They're looking at Australia, New Zealand, which, like you say, I think are really kind of, they have nice, simple, straightforward, easy to understand indirect tax models, but it was still completely unrecognizable for a business coming from the US, and the way that they manage things on a completely decentralized kind of model. And then, like you say, there's some that are very technologically advanced. Everything's in real time, everything's reported electronically. And then there are still countries where just to issue a credit note, you have to get a paper certificate issued before you can declare that credit note, which is the complete other end of the scale. And managing both ends of that scale and everything in between all in one go can be incredibly challenging. And that's where, you have to look to software solutions or managed services solutions, service providers that have that global understanding and the local knowledge of all the different areas where you have to try and address this.
Yeah, I'm going to close off this by going back to that project. This makes me think about one of the problems that we were trying to solve through there. And what we did was we originally started getting engaged with lots of local market partners and other things, and getting their bundles in. And we got to about 10 of those, not even, maybe 5 of those. And we just realized that actually everyone in these local markets was replicating the same thing, but doing it from their perspective only. So there was very little sharing across these markets, and that just created a lot of weight in the system, to be fair. So by applying that methodology of lots of local bundles and whatever else, what we found is that it just became concrete inside of the system. So as complexity grows, we just had more and more and more dissemination, which is why we went back to the drawing board and started to bring it in-house and start to work through all of those different markets and figure out what was common amongst all of them, and then share that same commonality across all of the entities that we could.
Yeah, that's exactly it, right? The commonality. What are the things that you can benefit from when you're looking to scale? And you know what you said about this project you worked on of finding lots of local service providers or local solutions. That's the time we end up talking to businesses a lot as well, where they've done this a handful of times. They've moved into a handful of new markets, gone through new procurement processes, new implementations for every country as well, and got to exactly the point you did, right? They've realized it's not scalable and they need to go back, figure out a new way of thinking about it.
Yeah. Let's move on. What about the topic of trends in global tax compliance? What are you seeing in the market?
Yeah, so I think this is really interesting, actually. You know, the types of trends we're seeing around managing global tax compliance. I think this all comes back to what we were talking about right at the beginning. You know, tax authorities are changing the ways that they manage tax compliance. Tax authorities are utilizing technology, they're utilizing automation, and by seeing this more and more around the world, this is driving what businesses are having to do to manage their compliance obligations as well. And so we regularly end up talking to businesses when they're going through this process of centralizing their compliance and moving away from kind of what we were discussing already from service providers, but internally as well, moving away from having local offices managing their local compliance. You know, you've got an office set up in France, you've got an office set up in Singapore, and that's really not ideal. They're all doing, as you kind of said with that project with your service providers, they're all doing their own thing in their own way. Maybe you have multiple ERPs. We see this a lot. People are looking to centralize onto a single system. Maybe they are all using the same system. You know, maybe you're talking to a business where everyone is using NetSuite, but they're still managing their own compliance in their own way. You know, maybe they're downloading a report, putting it into Excel, typing out numbers in a VAT return. This isn't the most effective use of your tax team's time. You know, we're not necessarily looking at businesses trying to get rid of those tax teams. They just want them to spend their time doing things that are more beneficial to the business as a whole than just spending, you know, 3 solid days preparing a VAT return for the month. It doesn't really make sense. So they're moving away from this decentralized model into a center of excellence, into a shared service center. And yeah, this seems to be, whether it's triggered by the changes in legislation, the changes in requirements, or just a more broad kind of move to find efficiencies in the way that they manage not just indirect tax compliance, but tax compliance more broadly, this is where we see people going. Sometimes as well, you know, where we get involved, maybe businesses, they've moved to a center of excellence, but the teams managing indirect tax compliance there, of course, they're based in one country. And we have all of these different countries' requirements. So for them, figuring out how to book transactions accurately or how to manage the rules that you have in an engine becomes a lot more challenging. You know, maybe they're bundling all zero tax transactions under the same tax code. Maybe they're not seeing the distinction between, between exempt versus zero rate, a cross-border reverse charge versus a domestic reverse charge. What this then means is that even though you've centralized that process, the people who are then filing the returns based on this still have the challenges and a lot of manual issues that they have to face.
Yeah.
So this then becomes not ideal as well. And so this, I think, is really where the two go hand in hand. this move towards centers of excellence goes along with how can you utilize software and automating processes to improve your efficiencies. And that's a real key driver for us, or key driver, I suppose, for businesses that we end up talking to. They want to get away from this decentralized model, bring everything into one place, and make sure, if businesses are in the same place doing the same thing, let's make sure they're all doing it well and they're doing it right.
Yeah, I mean, so that's I certainly see that, and I think there's a lot of goodness in that approach of centers for excellence, and it's all driven by technology and cloud technology in particular. One of the real joys about that global project I was talking about is that because I was able to work with all these different countries, I really got an insight into the capabilities of lots of different countries, people, how they work, what their approach is, and that gave me a huge insight into the fact that there really is there's no monopoly on smart people, that's for sure. There's really smart, capable people spread all over this world of ours, and being able to leverage those smart people to really take control of different markets, and remove tax from an administrative point of view, and put it into the hands of other people that are looking for efficiencies, I think is it really speaks to a best practice approach to the problem. One of the things you also touched on, though, is around managing the data of transactions and doing that effectively. And that's an interesting one, because we talk about that pretty much every day in our compliance legs, where we're talking about process compliance and data compliance, making sure things are coded and recorded in the right way to ensure that the reporting outcomes are at their highest and most successful, as well. And so it's a delicate balance between those users at the coalface who are preparing the invoices or coding up the bills or whatnot, and then the global drivers of that tax as well. The other thing that I think is coming with the rise of technology, and again we can thank South America for this, but the processing power of matching an invoice generated by one entity with a bill that's been presented by another, and tabling that up as a large data source for the tax office to then go and more or less reconcile and mark off, is so much cheaper now and so much more powerful that I think every government in the world would love to get their hands on that river of knowledge, not just from a tax perspective, but how it impacts the national accounts, how it impacts their stats organization, all over the world. This decreasing charge on superpowered cloud technology, and of course topically, the rise of AI to go and match up and do all this reconciliation and more or less figure it all out, I think is only going to be a bigger area of spend for the tax office, to lower their total cost of collection to as low as possible, which is of course is in the best interest of every taxpayer in every country.
Yeah, absolutely. And I think that's a really key point. With the kind of huge strides that have been made in technology in the last couple of years, it's going to improve processes for the tax authorities, but also for the businesses that have to manage this as well. I think sometimes it's easy initially to view it as, this is just one more thing that we have to try and worry about, one more problem that we have to try and solve. But if the tax authorities, once this is up and running, if the tax authorities are being able to reconcile transactions before businesses even have to try and reconcile them, it just streamlines that whole process. You get away from these huge, lengthy, time-consuming audits where you're sitting down with someone from the tax office for days on end, going through kind of reams and reams of paper, because everything has been pre-reconciled already. And yeah, like you say, Latin America has really led the way for this. And I think the world's attitudes on this have changed as well. 10 years ago, if we talked about the Brazil model, everyone was horrified and thought, how is this even possible? You can't expect everyone to pre-approve every single invoice they raise. Whereas now, countries, tax authorities and businesses look at this and can really see the benefit of it and can see how we can manage this to make it effective, for tax compliance, tax reporting and tax collection as well.
Yeah, I think it's only going to grow more for the betterment or the worsenement for the. Is that a true word?
It is now.
whether it's for the better of business or not, I think I feel like it's a bit of a red rag to the bull scenario there. So.
Yeah, that's it. I think we've got no choice at this point, right? So businesses need to find ways to embrace it, find ways to make sure it isn't too much of a kind of a blocker or a heavy lift to try and do this different over and over again in all of the different countries where they're going to be moving into. Like you said, a lot of it, if you're not looking at these kind of closed systems for each country, there is a lot of lift and shift. With things like real-time reporting and electronic invoicing, a lot of countries are using similar models. The PEPL network, originally just a European network, is being adopted in other countries. Singapore, for example, Australia, New Zealand. So you do have a lot of benefits of scale there, even though it can feel like every country is doing something entirely different. So I think we're reaching the point now with all of these kind of advances in technology that businesses just have to embrace it, and we have to find a way to work within this kind of new compliance landscape that we have.
Yeah. I mean, I think we're all on the same page on this one, Alexa.
Absolutely.
Look, I've really enjoyed this conversation. I mean, whether we're talking about it from a managed service perspective, or from a technology perspective, I mean, ultimately, the ambition which we're both carrying forward with is one of trying to lower costs on the overall administration of any business, lower those risks of missed opportunities for compliance, and of course create a better quality outcome altogether. And I think that's really a binding part, and it's really a key theme that we're building into this series on CFO productivity.
Yeah, absolutely. And, I think for businesses, indirect tax is just one part of this, right? I spend all day talking about indirect taxes because that's what we do. But when you're looking at, how to improve productivity in a solution like NetSuite, this is just kind of one part of the puzzle that needs to be fitted in to figure out, how you can improve efficiencies, like you say, whether it's through managed services, software solutions, usually a combination of the two, I think.
Yeah. There's definitely middle ground there, no doubt, Alexa. More spend on technology without the managed service, I find somewhat wasted. But by the same token, doing everything manually without leveraging technology is also a waste as well. It's about applying good process, good technology, efficiently and effectively to create the best outcome. Alexa, if anybody wants to get in touch with Avalara, the details are on the screen here. And likewise, if you'd like to talk to us about anything you're doing in the NetSuite world and how you're managing your own success, please feel free to reach out. Alexa, I've really enjoyed this conversation. You're a true deep knowledge on this stuff. It's been my pleasure. So thanks for taking the time, and I think we've helped our audience learn a little bit more about this area of global compliance and the changing landscape that it's bringing. So thanks so much for joining me.
Yeah, thanks very much for having me. It's been fun. And just one thing I'd mention on this. So you'll see that the contact details mention my colleague Tarek. He's the best person to contact just to kind of get these conversations started, and he'll make sure that any questions or inquiries you have get routed to the right person, whether that's myself or someone else in the team. But thanks so much for having me, Todd. This has been really fun.
Terrific. Thanks, Alexa. You have a terrific day.
Great. And you. Thank you.
Bye.